Well, good morning, everyone.
Good morning, Ed.
Hey, how you doing? Doing okay?
Pretty good, man.
Family not sick anymore, or are they still, little issues?
It's the allergies, man. It's killing all of us.
Oh, okay, sure.
Yeah.
That's what they say about COVID now. It's allergies. It's COVID.
No, I was gonna say everything's COVID these days, man.
No, dude, I'm telling a lot of people who think they have allergies really bad actually have COVID, which is okay. We got to get through this, and it's going to be the flu and move on. All right, so kind of market's a little weird these days. We're up and down every day depending on what's going on. Fed is thinking they're going to change some things and do quantitative easing, which means they're not going to be buying as many mortgage-backed securities as they have been, which, and then the Fed's going to start doing their own raising stuff. So we're going to start seeing some rates start going up, not that they've been doing over the last 30 days, which is kind of settling and coming down. So this is why we said, we know today where the rate is. We know what the value of the house is today. Buy it today. Don't wait. Because I think I've heard some people say, I'm going to wait till October because it's going to be better. It's not going to be better. It's going to be potentially worse because we know where it is right now. So,
yeah. And you can always change your interest rate, but not your purchase price, right?
Correct.
Yeah.
Yeah.
So what I wanted to do is, because we come from a place of education. So a lot of people
do?
Yeah, of course,
Okay.
man.
All right.
You're the knowledge broker, right?
I know a lot of stuff. It's
so
in there.
So kind of explain briefly, I know it's an in-depth question, but just in layman's terms for the average person like myself, where do interest rates come from and how are they affected?
They come from a mommy and daddy. I had to do that, man.
Yeah,
You set me up there. All right. So first I want to say whatever the Fed doesn't directly correlate with interest rates. All right. So when the Fed raises short-term interest rates, that's what they raise.
Uh-huh.
That only has to deal with overnight rates to banks, credit cards, home equity lines of credit, which we call HELOCs, and car loans and those kind of things. The mortgages are based off of mortgage-backed securities on the secondary market. And also they kind of run the same way as a 10-year long bond, but not exactly. Totally different troughs, totally two different interchanges, or but sometimes can go in the same direction, but not always. So there's a lot involved with controls interest rates. What the Fed does, and when I'm talking about originally, when they were putting so much money into the market by buying up all the mortgage-backed securities that other people didn't want.
Uh-huh.
What I mean by that is they put it out to the market to auction, and people bid on them and buy them, and sometimes it's good and sometimes it's bad, but the Fed was picking up all the additional stuff, and so we didn't really know. So when they start quantitative easing, which means not buying it anymore, that means the rates are going to go up to make it to where people want to buy those mortgage-backed securities and hold on to those. Gone are the days back in where you walked into a bank and they gave you the loan. Everybody sells it off on the secondary market.
Uh-huh.
That's the difference.
Yeah, I can say that's a whole nother show right there. But yeah, no, I think that kind of sums it up, because I know myself included, before I got in the industry, I just assumed Fed raised interest rates. That means home loan interest rates go up directly, right? But
we always get that call. Yeah. I don't know how many times I talk to people. I heard rates just went up. Yes, they did, but not yours. Or rates just went down because what the Fed did. Yes, but that has nothing to do with mortgage rates.
Yeah.
Which is very difficult for people to understand.
Yeah,
right?
No, but
because it's and it's just like FICO scores, getting it from what we get your FICO score through, when our algorithms are going through Credit Karma or some of the credit bureaus where they get their FICO scores from. That's a generic term, by the way. Each one has their own name, and that's different. And that's the same thing here. Everybody thinks the Fed. They only control with the easing and what they're doing with the money supply, buying the bonds, that kind of stuff. So we are going to see rates go up a little bit more. There's just nothing we can do about it. They're going to go. So if you had in the position right now to buy, you might want to really buy right now. And plus, there's a little bit more inventory out there.
There is a little more inventory and a little less competition still.
Right. And everybody's writing offers and they're getting accepted.
Yeah.
Because there's only a couple offers being written versus 14 or 10. And it's funny because a lot of agents are telling them, oh, we got one offer in and we're expecting 10 more. Whatever. Yeah.
Not right now.
Yeah. Sure you are. We're expecting, anyway. So you just have to look at right now, rents are up. Rents are going to keep going up. So the numbers just came out yesterday that Phoenix, Tampa, another place in Florida is up 30% year over year of appreciation. Nationwide's up 20%. Californians never are in the nationwide. We're higher always than the nationwide. So
Yeah.
Modesto's probably, I didn't look at the numbers, but they're probably up 22%, 24. It's just our numbers are going up and they're not stopping, even though people think we're going to have this bubble.
Yeah. I just did open house last weekend, and the 3 families that came through said, "Oh, don't you think we're in a bubble?" So it was great. I mean, it gave me an opportunity to really talk to them and kind of explain the market.
No, go to my YouTube channel and check out what we've talked about.
Yeah, go to Real Estate Jerky.
Or your YouTube channel you should have.
Yeah.
I'm just saying everybody needs to have a YouTube channel that you put their information on so they can send stuff to their people. Like I've had people go, well, I thought about this. And then so I would send them from the YouTube channel, one of the videos, hey, check this out.
Yeah.
This is what we talked about. This is why you're not going to see a bubble because the market's just not there. We do not have enough homes. I don't know how many times we can say this. 14 million more households since 2007 and 3 million less houses. According to Fannie Mae, at the additional houses we're building right now, that's 200,000. It'll take 19 years to get caught up.
Yeah. Well, and I mean that, just an idea for another show with all these investment firms buying up houses also, the idea is to make a lot of us permanent renters. So let's get in on this opportunity where we can.
It's Pottersville.
Yeah.
They want Pottersville. And by the way, if you don't know what Pottersville is, you must not ever watch It's a Wonderful Life.
I know it'd be a better Christmas reference. But
well, no, but that's what it is. They want renters. They want 70% of Californians to be renters. Then one thing is they know how much money they're going to make. They'll be able to sell off those investments and keep making money on them, which is great. If you can buy property and rent it, and if you have property, keep it and rent it. And that's what some of the problems are.
Yeah.
Or
don't sell to investors.
Yeah. Well, people want, whoever they're going to go off. That would be great, but people usually just want the price, especially if they're leaving, they don't care. Or if they don't like their neighbors, they just don't care. But someone telling me yesterday, multiple offers still under 400,000, of course, because that's, low numbers.
Yeah. Like I say, there's,
FHA price point and below 476 and below is going to have multiple offers. Right. No, I'm not talking 20. But
no, but you'll probably have 2 or 3.
Yeah, which is better than none or better than 20. So I'd rather have 3 to work with than that way you don't have to bid so far over, right?
Yeah. It just kind of depends. It's just been really weird. We're all trying to keep up with this market right now.
And everybody's like, when are we going to get back to a normal market? We're in a normal market going forward. This is the normal
We were
market.
just in a super crazy market since 2020.
Well, that's because everybody wanted out of the Bay and now they can work from home. But some companies like Tesla's like, get back to work.
Yeah.
Get in here. If you don't get in here, we're going to get rid of you.
Yeah.
And I'm telling my staff, stay at home. You do more work at home. So stay at home.
Hey, if it's working, man.
Yeah. Well, that way it's just, I straight to the point. What do you mean? Okay. All right. Bye. Yeah. If you're in the office, you go, hey, how's it going? How was your weekend?
That's true.
Some of us are a little busy. We got a lot to do. All right. Thanks for showing up today. Thanks for letting us talk about rates. Anything you want to add before we go?
No, that's it. We're just here as for education, trying to teach people everything that there is to know before you even get into buying a home. There's a lot to know and it can be overwhelming. So if we can break it down bit by bit, we're glad to help.
All right. I just thought of an 80s reference. Break it down. All right. We'll talk about that next time.
All right.
Everybody have a great day.